Good afternoon this Tuesday, July 29th. Well, grain traders, things have been pretty much just straight down, but the vertical rise of feeder cattle getting everybody's attention, even grain traders, as everybody keeps wondering, when is this dynamic bull market going to stop? It seems to overcome everything it's thrown at it. There has always been threats of consumer demand, Mexican border reopening. Every time it stumbles, it takes that as a buying opportunity and races higher again. Well, we have something we want to show you. It's a study. It's mathematical. It's an idea of when one has to really worry about this rate of ascent that we're seeing in the market. And for that matter, it can peak any day it wants. But if it doesn't peak immediately, we have an idea. So hang on. Now, of course, the live cattle chart continuing to move higher. Wave 5 is what we're in right now. This is the continuation chart, so it carries the October contract. The August contract, we believe, is the one that's going to go up and tag our target of 334.5 as it goes to meet cash, as cash stubbornly holds higher. We get this by the equaling of wave 5 is equal to wave 1. Here was wave 1 on the weekly charts back in 2020 to 21. And then, of course, we had a wave 3, and now we are in wave 5, and that wave equals 234.5. Now, that's not to say that is the high, but it says that the chart targets, when it gets in that vicinity, gives it a sense of, be careful. Now, the daily cattle chart for December, what I'm going to show here is cattle for December, year over year over year, are always worth more than whatever the weakest time of the summer contracts are. And of course, we know right now August feeders are at 227, probably on their way into the 230s, which implies December cattle should eventually someday be worth more than that. Well, of course, that's probably after they get a dip and then try to run higher again. So be careful, we are extending here, but this isn't so much the one I'm looking at. We're going to get into feeder cattle. Now, feeder cattle today achieved our targeted objective of 337. We came up with that way back here when we turned up from wave 4. We did the wave 1 equals to wave 5 is 330. But if it does the golden ratio of a 1,618 of this leg, well, it can go to 337. Well, that's today's a target that has been achieved. But when we look at this feeder cattle market and the strength it's been exhibiting, it still hasn't done that thrust, you know what I mean? That like we could have had on Monday gap and run from the inventory report and cattle on feed report. Instead, it had a lot of willing sellers who were already long that sold into it, and yet we couldn't even take out a previous day's low yesterday in that pullback on the session. And in fact, since the beginning of July, there's only been 3 days where we took out a previous day's low. Here is the first attempt, this 1-2 days here, and then here was 1 day, and here's 1 day. So it's actually a total of 4 days after we started the month on June 30th. We pulled back and then took off. Now that you don't see very often, to have that many days up with only 2 token days throughout the month where you take out a previous day's low. This day was higher than the previous day. It was this day here that was lower than the previous day. And what did they do? Buy it. One more bump lower and we buy it. And so the bull market is working on trying to get accelerating. But if we can accelerate, when would be a window that acceleration could run out of gas? Well, we have to go look at the weekly chart. And now if you look at the weekly chart, you really can see that acceleration here, especially now going on since June and July. It seems like just only yesterday we crossed over that monumental $300 mark, and of course struggled with the possible reopening of the Mexican border, and then we just accelerated out of there once that border was reclosed again indefinitely. And so here we are racing higher. The weekly chart almost looks like a rhino horn coming on here, but the daily chart yet reflects it. But when we look back, since this bull market started, since 2020, when this thing got underway, when have we been peaking? Well, it seems like August 2nd was the week we peaked last year. That would be next week. But the actual peak was in July, and it was just a grindy affair. And of course, the break didn't last very long into early September, because that's when we were getting ready for the most favorite part of the bull market, that is now, that could be in its last session days. We'll see. On the continuation chart, we can go one more time. When was the prior one? Well, September 15th. Was the prior high. Now that was a significant decline. That one went all the way into December 7th. Now, I want you to notice as we get farther back in time, the breaks get shallower. The prior break to that, August 19th. But this break was from a considerably lower level and was almost $30 in length. Well, $30 from 180, that's a big deal. It's similar to like $60 from 340 if we were to get a break right now, especially with our moving average support so far below us, barely crossing over 290. Let's go back another year. August 27th. Let's go back another year. August 14th. These are the year highs when we take into consideration when the bull market got going in 2020. Now, if you mathematically average these two together as they are the outliers, August 2nd and September 15th, well, now you get around August 20th, excuse me. Well, if you got August 20th for these two for an average, here's August 19th, August 27th, August 14th. What this tells a discerning mind looking for, a potential event on time that could be an issue, you've got to say mid-August. Mid-August, anywhere the season for Black Swan season opens around August 14th through August 27th. That's your Black Swan season you have to worry about that this market could peak. And so if we're accelerating it further, I know a lot of viewers are either LRP'd or optioned up. We've been lucky. A lot of times we've been laying in our LRPs and our options at cycle highs. And as far as this year is concerned, it's been very explosive. And now at this point in time, if there's any LRP potential that can't be done, you can utilize options to bring your basis up. So if we explode higher, say when this thing decides to go to the 350 range, which, just do this acceleration point, well, then come in and start looking at 340 puts, something you can pick up for a couple of dollars. Because when this thing blows and energy runs out and a black swan is found and it's shot from the sky, the break could easily be $60 back to where we just previously were, and moving average support comes in at 290. And when you consider percentage-wise, $60 would be equal to a lot of these prior breaks, especially these older breaks when you're down to these much lower levels. It gets you the significance of what can happen. So that's on the feeder cattle. If you're getting value from this video and you want more, check out our daily newsletter. Each morning we send out a market summary to start your day, plus deep dive analysis, trade alerts, breaking news, videos, just like this one. Whether you're a farmer or a trader or you're tracking markets, this is something you might find useful. So either click the link below, try our QR code, or you can call our office 701-222-0221, or go to our website, heartlandinvest.com. You can subscribe there. Quick observation on crude oil. For 2 weeks, we've been discussing that since this low was in, we're looking for an ABC bounce in here for a series of 1-2-1-2. We had said last week after the August contract expired, likely a wave B in here, and it needs to get rolling. Well, President Trump took care of that with the EU community announcement over the weekend on a deal. They're going to buy U.S. oil. And then, of course, he's given Russia not 50 days anymore, 10 more days as of today to figure their stuff out with Ukraine and get a truce, or we're going to tariff even his grandmother, Putin's grandmother, if he doesn't get cracking on this. So this is giving us a crude oil spurt where well, as of today, we hit the 38% retracement. You usually always can do that. Otherwise, 62% is a very probable number, near 73.5. We haven't hit hurricane season yet. That starts mid-August. That maybe can get us back to 78% retracement, or the trend line off of the highs that go way back 2 years, somewhere up in that $75 range, which we banged pretty good during the Iranian war, which President Trump put an end to with that strike onto their nuclear facilities. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.